Welcome back. We are doing another exciting interview with our guest, Sarry Ibrahim. Sarry is the CEO and president of Fine Asset Protection. You can find that at fineassetprotection.com. And he really specializes in the program Bank on Yourself. We invited Sarry to join us because we wanted to look at financials from kind of a different perspective. A lot of times on the show, we are looking at, kind of the nuts and bolts, getting into your profit and loss, your balance sheet, and working with the small businesses. But Sarry's going to bring a little bit of a broader perspective, kind of talk about some financial stability for your small business, some best practices that he has. And so with that, Sarry, if you don't mind, why don't you give a little bit of your background, kind of let the listeners know where your expertise is, and then let's talk a little bit about what you do and how that can benefit small businesses.
Hey, Ryan, thank you so much for having me on. I appreciate it. So kind of a little bit about me. I'm a financial planner. I'm from Chicago, Illinois. That's where the company is also located. And I pretty much help clients in all 50 states. And pretty much a lot of my clients are small business owners and real estate investors. And pretty much we show them how to build safe and predictable wealth, regardless of market conditions, and how to kind of budget and kind of find more cash flow. One of the problems we see with a lot of small businesses is they kind of do a good job at increasing marketing and increasing revenue, like through marketing. But then it's a matter of keeping that money. And this is where we come in. We help kind of the clients keep more of their money over time, and then eventually for them to become their own sources of financing. So that's who we are. That's our specialty. It's what we do. We work alongside, CPAs, alongside attorneys, alongside other professionals, but we're kind of part of the team when it comes to small business owners.
Mm-hmm. Yeah. So I kind of want to kick it off with this whole idea when we're talking with, entrepreneurs, and a lot of times they're looking at kind of financial planning and they isolate it out. They're like, well, okay, financial planning, that's something that you do if you work for a company and you've got, your 401k, that's great. But as an entrepreneur, I really don't look at that. And I loved how you were mentioning right off the bat, you're like, we help them manage their cash flow. We help them understand where they're really coming in. And I want to know, what is it that, specifically that you can do that's going to help a business, with their cash flow, that's going to help them better understand their finances, kind of touch on that, and just let's lay a foundation here.
Yeah, definitely. So, when it comes to, for example, an individual owning a small business, a lot of times those two things are kind of separate. The separate bank account, or at least they should be separate bank accounts, separate projections. It's kind of, they're two different things. You are different from your entity that you own. But what we do is we do a financial analysis. That's kind of the first step when we work with the client. We do a full, thorough financial analysis on the individual, the person themselves, and their life, with their spouse, with their kids, with the parents, pretty much the whole picture of the financial situation of that family. And then we also do one on the business, and we kind of connect these together, because a lot of times a small business is a very personal thing. Mm-hmm. There's a lot of small business owners wear numerous hats, and there's a lot of connections, meaning that the small business is that person, and that person is a small business. Even again, if it's separate, we kind of try to look at it as one picture, and we get an understanding of what's happening right now with the client, what's going on financially, how are they doing, and then we also kind of look at too for retirement. What's the retirement strategy? What's the exit strategy? What's the retirement strategy? Or do they plan on selling the business? What's next? And for a lot of small business owners, they're surprised when we ask these questions. They're like, oh, I never thought about what's going to happen in 20 years. I didn't think about if I'm going to sell the business, or if I'm going to have my child run it, or I'm going to, lease it out to somebody. These questions kind of, most small business owners are not in a situation where they can retire off their business. Mm-hmm. So they have to kind of think in these ways. And this is where we come in. We help them kind of think of the next steps to do. We also help them pretty much a lot of budgeting tips, a lot of budgeting tools. Like, for example, having a daily tracker of income coming in and expenses, and something that's kind of basic to see. And we actually build this out for our clients. We give them a free tracker to use, and these small things. And kind of from my experience too, as a small business owner, I failed at becoming a small business owner when I first started. And I went through a list of things that I started a small business, quit that, or just put it on the side, went and got a full-time job. And then I went back to being self-employed because I always want to keep doing that. Just because it didn't work at one point doesn't mean it's never going to work. I just needed to kind of deter my goal for a little while, then come back to it, and which is exactly what I did. And when I came back to it, I was like, hey, you know what? Instead of just doing this from scratch, I'm not an inexperienced business owner now. I do have experience, even though it didn't work out the first time. I still have experience. So I made a list of things that I did wrong. And one of them was, the first one, I didn't have a business plan. And then part of a business plan was number two, I didn't have a marketing plan. I didn't have a budgeting plan. I didn't know where I was going financially and how it's going to go. I didn't have other sources of income. I didn't have just cash reserves. So a lot of basic things. I didn't have access to low interest capital or 0% interest capital. I did good capital, in other words. So I went through these things and I was, all right, now I have to do the opposite of these. I have to have a business plan in place. I have to have a budgeting plan. I have to have a marketing plan. And pretty much I was able to, and then back to the marketing plan, and the budgeting plan is having a budgeting plan and knowing where to go. Because when you know where to go as a business owner, you're more likely to get there. Mm-hmm. And another thing too, I see this a lot of my clients, is that they'll be like, yeah, I did a business plan, 3 years ago, and I haven't looked at it since. And I think that it's a more of a repetitive thing. It's not just something you do at one point in time. It's something that you keep overlooking. You keep doing that because when you keep looking at a plan over and over, it sinks into your mind. It sinks in. And then now it's like a language you speak. You understand your business, you understand the language, and you're more likely to get to your goals if you know where you're going.
Mm-hmm. Absolutely. So I feel like, the fire hose got turned on, and, we're sitting here drinking because I'm just like, whoa, there's a lot that came out in that.
And I feel like you're not alone in this, right? This is something that entrepreneurs all over the world face, right? We see time and time again that somebody's first shot at a small business often fails, but that's their learning experience. That's their foundation to start from. And so for you to be able to articulate that these are the kinds of things that are universally understood among successful entrepreneurs and small business owners, or maybe people that have failed for their first time, it's definitely a hopeful message. Like, this is something that it's okay to have happen. You learn these lessons and you can rebuild. You move forward from it, and there are better ways to do things, right? And you've outlined a few of those, but yeah, I think it's really cool.
So this is really, as I was listening to you talk, I'm like, hey, there's a lot of information, and I picture that there are probably some listeners that are like, whoa, like I just got overwhelmed. So let's bring it down, and I'm going to ask this question. You've got a lot of experience in working with businesses. You've seen some mistakes. What are some of the big mistakes that are super easy to fix that you're like, man, if only businesses would just do this one little thing, it would save so much grief and so much headache. So from your experience, I know everyone kind of has their top 10 list, but I'm talking like, what have you seen down in the trenches working with businesses? What are the top one or two mistakes and an easy way to just avoid getting into that situation in the first place?
Yeah, definitely. One mistake that I see is the ability there's a way for business owners to kind of recoup their losses or to kind of recapture the money they're spending so that way they can keep more of it. And I kind of have to understand the concept a little bit. I have to explain the concept a little bit to be able to articulate this question or this answer. Mm-hmm. So pretty much there's a concept, it's called the infinite banking concept, or it's also known as the bank on yourself concept. It's a way for business owners to kind of store cash somewhere, have it grow, earn compound interest, and then be able to access this account so they could borrow against it and use it for any purposes they want. And I see this as a way that, because in businesses, it's not an either or approach. It's not either you're earning income or you're spending it or you're saving it or you're saving for your retirement. There's a way where you can connect all these things together. So you can save for your retirement, become your own source of financing, have kind of more certainty in your business using these cash reserves as a way. And this is just one small thing that I feel like if businesses applied this strategy, they'd be able to stay in business longer, and they'd also be able to do more things in the future, like have a higher valuation on their business, be able to take over other businesses, be able to do other things with the ability to keep more cash in their business and in their lives.
Now, you're making it Well, okay, let me actually back up with the question. This is what I want to ask. A lot of business owners, they try and do this process. I've seen them try and do this process, and they struggle with it because to them, it's just, well, I'm going to put some money away, and then when I need it, I'm going to call on that money. And And as you're describing this, there's more to it than just, yes, put some money in a savings account, and then when you need it, you've got that money in the savings account. You're talking about there's an actual growth strategy here that needs to happen. And so, what are some of the starting steps? Because there's more to it than just putting a little bit of money away in savings and then having that.
Well, yeah, spot on. You're spot on. There's more to it. And for example, let's just say we're going to put money in a savings account. What are some problems with that? Number one, inflation. So if you have your money sitting in a savings account, inflation is going to outpace your dollar is going to be worth less in the future if it's just sitting in a savings account. So you need it sitting somewhere that's going to earn compound interest that's going to actually outpace inflation. And then also the loss of opportunity cost. So as a business owner, and I see this a lot also on the real estate investing side, where a lot of, they would have cash sitting in a bank and it's almost a loss by just sitting there. It needs to be moving around. It needs to be moving around in marketing dollars, in advertising, in branding, in different ways, new employees, whatever the case might be. But that money needs to be moving, or else you're going to have a loss of opportunity cost. But then I would contradict myself if I just said you need to spend all your cash in your business, because this is all about saving cash for the future. So now it's, how do we do both? How do we save for the future? How do we have cash reserves that sit there? And how do we have a liquid and using it at the same time? And the way to do that, kind of from a concept that's been around for 1,000 years, is, companies would have money earning interest somewhere. And then when they want to access it, they borrow it from different sources at lower interest rates. So this way there's an arbitrage where you're earning money on your money and still being able to use it. And this is what the concept is based off of. The infinite banking concept is based off of the ability to have your money grow somewhere, earn compound interest. And then when you want to access it, you borrow at a lower interest rate from somebody else. Even the largest companies and largest banks do this. They have, billions of dollars in cash reserves. And then when they want to access that money, they don't subtract from those reserves, because if they do that, they interrupt the growth of their overall reserves. They borrow from different sources at lower interest rates, and then have an arbitrage split where they're earning more money on their money than they would be just using straight cash from a bank account. Because if you do that, if you just use straight cash from a bank account, then you lose the opportunity to earn interest on that money forever. But if you have it sitting somewhere that's earning compound interest, and then when you want to use it, you borrow at a lower interest rate against it, then you have the cash reserves there, and then you have like an in-house source of financing. And I know it's really like technical stuff, but pretty much just think of it a way as the ability to grow money and use it at the same time.
Yeah. So this is what I really like about what you're talking about. I was doing a little bit of research the other day, and I was looking at, kind of some of the modern practices of larger companies, because small companies, honestly, the difference between a small company and a large company is usually large companies do best practices and small companies wing it. I'm being a little facetious here, but I'm looking at what are some of the best practices, and large companies, they have chief investment officers. Like it's a management level position that is in charge of managing the investments of the company. They really don't have anything to do with the business itself. They have everything to do with managing the investments. And that's exactly what you're talking about here. And, I look at it and I'm like, man, as a small business, sure, you probably aren't big enough to justify putting someone on salary and calling them your chief investment officer. But the concept holds true. And whether you're going to be doing this, whether you're going to, contract with someone like yourself who, specializes in this, whatever the case may be, but as a small business, if the big boys are doing it and they're very successful, you should be doing it too. I mean, that's a little bit my philosophy.
Yeah, definitely. Two things, actually. So one, I just started a podcast called Thinking Like a Bank. And I pretty much show listeners how to think like a bank by applying the same strategies and principles that banks use. So we're pretty much going through research on what banks do and what like large private equity firms do, and the more on the mindset way. It's not a show about how to become an actual FDIC insured bank. It's more of so on the thinking principles. So I like how you mentioned that. And the reason why we chose banks to mimic the way they think is because the banks, have a lot of money, trillions of dollars. They're doing something with the mindset side, rather than just having the money. It's more of what they're thinking, what they're doing, the expertise they have. And the second thing you mentioned that I really like is the chief investment officer. Yes, that's definitely, it would be awesome to have somebody on payroll, but actually, and I'm not, saying this to promote us, but you can actually have us as like your chief investment officer externally to your business, and we can kind of take care of those things for you. And this kind of touches on a third thing that I wanted to mention in connection with this, is that the way we don't charge any consulting fees or service fees, or we don't have any billable hours. We get paid after a solution is implemented. So this means that you can contact us, go through the whole process of learning about this concept, how we can help you, and then when it's time to pretty much execute or complete that, then we would get paid from the insurance companies we work with, the financial institutions we work with, but that would come at the end. So this means that you can contact us and get all these free consultations without having to pay anything. Which we know from all our small business owners is that they would actually like a lot of people don't like to pay for things before they even receive them.
Right.
So something to kind of help out is that you can have like this chief investment officer externally to your company that understands your company and understands your needs. And I apologize if this is too salesy. I just wanted to kind of address it from the way of seeking more information on this concept and how to learn about it.
Yeah, I don't think that there's anything wrong with that, because the principle that you're talking about, yeah, you gave the specific example of what you do, and we all recognize that you have a business and you're good at it, and so you're passionate about it. But this same concept applies to so many other aspects. I wish that small businesses would realize the importance of getting their team put together. And as a small business, a lot of times you're like, well, I can't afford a chief marketing officer and a chief investment officer and a chief financial officer, and so I'm just going to do it all myself. And it's like, no. You can afford it because there are services out there. There are people who specialize in it. And, it's amazing the level of free consultation available to small businesses. It's also amazing how many contracted hours you can, if I'm a small business, I don't need you working, 40, 50, 60 hours a week on my company. I probably need 2 to 3 hours a week. And so, I'm only going to pay for what I need. And so I actually appreciate you bringing that up. And, it's cool. Do a little self-promotion because, we do self-promotion too. We tell people all the time, hey, buy our stuff because it's amazing. And it is.
Yeah, right?
Let's talk a little bit more of how do you get started here? Because I've got a lot of businesses that they feel like they're in this downward spiral. It's the cash crunch. You come to them and you're just like, well, you need to put cash aside so that you have cash, and they're just like, idiot, I don't have cash, so I can't put it aside. But thank you for coming and giving your presentation. And so how do you talk to those businesses that they're like, I'm already in the cash crunch. I would love to, if I could only invest, this percentage, sure, but I can't even make payroll in 2 weeks. And so, what can you say to those businesses who feel like they're on the wrong side of the equation?
Yeah, definitely. And we do come across that where clients are like, we're having obviously cash flow issues. So we never want to be an expense. I don't want to be, the next bill on their, monthly statement. We're trying to help that monthly statement not affected. And we kind of tell our clients that this is more of repositioning dollars, not necessarily a larger expense, but more of how you're spending your money and repositioning those dollars in a more efficient way. We're all in the banking industry. Everybody is. If you earn a paycheck, if you're a W-2 employee, you own a business, whatever the case might be, we're all in the banking industry. We all use checking accounts, savings account, debit cards, credit cards. Therefore, we're all in the banking industry. It's just a matter of being on the right side of the table and repositioning those dollars so that way they can kind of funnel back into the account we own that's earning compound interest, and then we can reuse it. For example, some small business owners, they tell us, they're tight on cash, but then we go through the analysis and everything, and then we find out that some of their vendors don't charge them for like 60 days later. So they're sitting on cash, for 60 days. It's not their money, it's the vendor's money, but they're just holding it because they bought their products on credit, they sold them, they collected cash, for example. This is more of product businesses, kind of warehouse, wholesale kind of types of businesses. But this is just an example that they're sitting on cash now. They could use those dollars to fund a policy that the business owns, and then be able to borrow against it, and then use that borrowed money to pay the vendors, and then kind of have this cycle going where they're earning compound interest on money that's just sitting in a bank account. Rather, in other words, instead of the money just sitting in a bank account, not doing anything for 60 days, they can earn compound interest on that. They can also use that policy to increase the value of their business. So the cash is sitting in, it could be sold to the new owner, and they could kind of add that on, or even add that charge on plus interest to the value of the business. Now it's an asset on the balance sheet. So some of these tips and strategies can help really change the way a business owner kind of proceeds in their business. And again, it's not so much of adding an expense, it's repositioning those expenses and kind of finding a more efficient way of using those dollars that you're already earning and you're already spending them. But again, just repositioning those dollars that you're earning and spending can make a huge difference in your business.
Yeah, and again, I look at this and I'm like, if the most successful companies in the world are doing this at a large scale, why can't you do this at a small scale? You know, there's no difference. A percentage is a percentage. And, you know, if you can get an extra 3, 5, 10% off your money,
yeah,
you know, that's money, you know. And so I think that's wonderful. So I'm sitting here thinking, you know, because I always bring everything back to kind of that small business owner and what they're looking at. One of the things that I've come across very often, so, you know, we do small business trainings, and when we're doing these small business trainings, you know, like we've got our one program, Growth by the Numbers, that, you know, we encourage a lot of people. We're like, take this financial literacy, you know, financial management, learn what you're actually doing. And I come across the CFOs or the accountants in the company that they'll tell me all the time. They're just like, yeah, you know, thanks, but no thanks. Like, I already know all that stuff. Now, for me, you know, just kind of getting personal here for a second, I got my undergrad in finance, and then I went ahead and got my MBA in entrepreneurship. And I remember when I got into the real world, I'm just like, oh man, I've got this. You know, I studied finance and I started working with these small businesses, and I found that what I studied in school was not like, I got my degree in corporate finance, and small business finance is not the same as corporate finance. And so as I started developing these financial tools for small businesses, they're different than, you know, what I studied at, you know, when I went to Westminster. And so do you run across this problem? Do you have this situation, or what would you say to a business that says, oh, don't worry, you know, our CFO manages all of our investments, or, you know, we've got a bookkeeper who helps us out, we're okay. Is that adequate, or is this something above and beyond that really, you know, most businesses could and should be doing?
Mm-hmm. Yeah. So I actually talked to this with my close clients too, my close friends actually, who are also business owners. And then some of them say, like, hey, if it's not broken, why fix it?
Mm-hmm.
And I see that point. But what if you can make it better? You know, who said we have to be average? Who said we have to just be normal? Who said we have to just kind of stay in our lanes? What if we want to go faster and bigger and take on the next challenges? You know, that's where we would come in, is to make things, you know, better and sometimes we're solving problems, you know, we're just solving just to get the clients to normal, and that's fine too. But even if it's working, if you have a bookkeeper, if you have, you know, your accountant and everything's working, why not take it to the next level to make things better, to make things faster? That's one approach. And the second approach too is with this concept that we use, you know, the infinite banking concept. And I strongly encourage clients just to check out this concept, just learn about it, read one book about it, you know, and learn about this. A lot of accountants and financial advisors have no idea what this concept is. So when we talk to small business owners and we're explaining this concept to them, and they're like, yeah, you know, my accountant never told me about this, so I don't really think it's necessary. I don't really need it. And I see that, again, back to the normal part, but, you know, a lot of insurance agents and financial planners and accountants don't understand this concept. Doesn't mean that it's not a good concept just because they don't understand it.
Mm-hmm.
So yeah. I encourage small business owners to just understand this, you know, for free. Just learn about this concept. We actually have a free book that we give out to clients just to kind of understand what it is. So I encourage them to just understand what this concept is, and give this to your accountant too. Give this to your bookkeeper. Give this to your staff, to your outside CPA. You know, have them also look at this too and see for themselves that if this will be a good tax strategy. And then kind of on a side note, there are a lot of tax advantages with this concept, utilizing this concept. You know, the growth of the funds, that as you're earning compound interest, it's growing tax deferred. And there's a lot of other tax benefits with this too. So kind of on the tax side and the accounting side, this is something if they knew about, they would actually encourage their clients to utilize more. And my experience too, working with, you know, accountants too, is sometimes, I don't know what it is, but not to bash on CPAs and accountants, but pretty much I've noticed that if they don't understand something, they'll just tell their clients, you know, you don't need to do this. You're fine where you're at. Yeah. Your tax solution is okay right now. It's fine.
Oh, I've seen that. I've seen that a lot as well.
Yeah.
So I think you've got some really cool things going on for sure. To me, this isn't really my realm, right? Finance, it's a little bit outside of my expertise. I am familiar enough though to grasp the concepts and things. And to me, this is like being able to be in two places at once, right? You can, like you're saying, you can still utilize your money and it can be doing more for you. You can get more out of it. You can squeeze more juice out of the lemon, so to speak.
Yeah, that's cool. So, you had mentioned that that you got a book that business owners they can get. It was a free book, and so what I want to do is, we're kind of coming to the end of the interview here. We're going to wrap it up, but as we wrap up, what I would love is to let our listeners know, how do they get a copy of that free book? How do they contact you? How do they get that assessment? You mentioned a lot of tools that are available to these business owners, and so what do they do if they want to get access to these tools and get a copy of the book for themselves?
Yeah, so the easiest way to get in contact with us is they can go to our website. It's finassetprotection.com, FIN, assetprotection.com. The name of the company is Financial Asset Protection, and the website is finassetprotection.com. And pretty much you can schedule a free appointment. You can schedule an intro call, a financial analysis. You can just ask for the free book. If you don't want to talk to us yet, you want just the free book, we can send you that free book via PDF and email it to you. Numerous ways to kind of reach out to us. Just the best way is finassetprotection.com. I'm also pretty active on LinkedIn, Sarry Ibrahim. We'd love to reach out to you. And again, if you don't want to have a call with us, a lot of clients are not ready for that. They just want just the material first, then that's totally fine. Just reach out to us. We'll send you a free copy of the book. No spam, no obligations, just a free copy of the book if you'd like it.
Nice. I like that approach.
Yeah.
Cool. Well, Sarry, thank you so much for joining us. We truly have appreciated you coming on the show, and what you've brought to the show is some really cool content. So thank you so much for that.
Thanks, guys. Thank you so much for having me on. I appreciate it.
Yeah, have a good one. Take care.
Take care.
Thanks.
Take control of your business today. Go to learndesk.us and search marketing management and money for the small business insights you've always wanted. Be sure to stay tuned for new episodes on the first and third Wednesdays of every month, and make sure to subscribe to be notified when we release bonus content such as interviews and short discussions.